Hello, everybody. I told a couple of the guys on the post that I'd make a video covering what I saw develop in the AUD before I posted it, and also what I saw on the Euro-Japanese yen. It was a nice consolidation, both really nice moves, and I wish I didn't have such an aversion to trading so early on a Monday. One of the guys I learned from always talked about how he didn't like to trade on Mondays and how he didn't like to force things on Mondays. And he was a professional fund manager, so I figured, okay, he's the true pro, and I always listened to him. And so I've got this prejudice against trading on Mondays. It takes a lot to get me to trade on a Monday, and unfortunately, yesterday was one of those days where I wish I wasn't that way. So anyway, here's the AUDUSD that I had posted. What I saw was this 79.80 was holding up here. It held up here. That was the first place where it established itself. And this took this bounce down to 79.12. But then it came back, touched here, stayed close to it, touched here again. Didn't get through it. And that's where, for me, that's a good sign that that's a pretty good resistance level, especially on hour candles. And then if you look at the bottom, it's got that wedge shape to it. So I just went ahead and draw a trend line there. And the next thing you know, this pops out while I'm in the middle of typing. I was typing the first post about the AUD move that I saw. And by the time, you copy and paste and do all that other stuff, you miss it. And then this happened. And then, too, I was in such a hurry to get everything posted. I typed the wrong number. I wrote 8080 instead of 7980. But anyway, clearly here, just want to show that here's the resistance, and sometimes it can be support coming down from the top. But this was a wedge forming up against the resistance, an uptrend. Getting squeezed up against the resistance line, but then it broke out here. And then this price action was pretty nice. It broke below here, held here pretty nice. So that would have been a good entry spot. Once you see it break and it doesn't get back above that line. And for those of you wondering, this was a safe stop, a safe area to be up here, because this is what you're basing the whole trade on, is that resistance line there. So putting your stop just safely up above here, leave some room for a little blip like that, and plus the spread. You just want to keep that safe distance up here. I'd say probably about 20 pips off that line is pretty safe. And then it just took a nice ride down, and we'll take a look at the live AUD chart right now, which is here. And you can see it made the break here, made a nice I think about 140 pip run, which is a nice move for the AUD. AUD is a good steady mover. A nice price for daily range for the AUD is 100 to 150 pips, but 140 pips in a couple hours or a few hours here is a nice move for the AUD. And I'm kind of sorry I missed it. So there's that move. And then the other move that I posted was Euro-Japanese yen. And there's that. This was setting up pretty nice. What I like to see before consolidation is a nice range. And Friday, it's kind of found a little range in here before the NFP nonsense. I've been reading on several of the other threads and other blogs that those numbers were bogus. I'm sorry, but there weren't only 300 and whatever thousand jobs lost in the U.S. I thought it was going to be a lot worse than that. With the car dealer problems, there's so many, there's so many dealers closing down and everything else. That was just, there's car dealers closing left and right, and there's just so many people losing jobs right now. That just seemed like a total bogus number. The dollar needed some propping up. That's all I'm going to say about the issue. But then after the NFP nonsense, after it came back into this range, you can see this candle stayed in this range. And then it just started to range around a little bit. But then that range started moving up. up against there, and then it bumped up here after it made a little breakout from the daily pivot area. Then you can see it's the squeeze starting to happen. It bumps up here, gets a little lower, 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 then it bounces down here to the bottom of the trend line and starts to squeeze within that. And that is one of my favorite setups. The consolidations are always pretty good. Move. Then what you're going to want to watch for is for the candle to break above or below the trend line and hold. Once it breaks above, you want to make sure that that line goes from being resistance to support, and vice versa. You want to see it going from support, breaking through support, and then becoming a resistance line, and that candle not being able to poke back through it. So here's the Euro Japanese Yen chart. Let me move this screen over. So here's the live Euro Japanese Yen now. The range, squeeze, and then the break. Made a break here, but it just did not want to stay under there. I wasn't watching it real closely because, like I said, I knew I wasn't going to trade, but then I came back in and saw this starting to form. Like I said, what you want to watch for is, I'm pretty sure this action was probably pretty herky-jerky. It's probably whipping back and forth, probably going up and below and back up, below and back up. What you want to watch for is that break, for it to hold, and that hold as resistance, and then continue its move down. So let's say you entered in here. You still got a nice 100 pip move out of it, or you could have, or start scaling out, taking partial, moving your stops down. But the thing to watch for is this to go from support to resistance, and the same thing going up. You want it to go from resistance, breaking through resistance, and then becoming a support. And then that's when you get a feel that the price action is going to stay above that line and hopefully continue in the way that you traded. Safe place to put a stop would be up above this line. For this trade, I would have felt safer putting it above here just in case it retraced. That way you have you have one barrier here and another barrier here to keep it from hitting that stop. I like to keep my ratio around 1 to 1, so if I'm looking at a 50 pip move this way, I'll put my stop 50 pips this way. And on the Euro Japanese or the pound yen, you've got to kind of give yourself some playroom with your stops because they move so much. Something that you use on the Euro would be like 30, 40 pips, but on the Japanese yen, I feel a little more safe at least putting 50, sometimes 60, but I really don't like going that far because a lot of times I'll start taking profits at 50 pips especially on the pound yen. I don't like to hold too long and get greedy, because I've got those pips, why give them back? So anyway, that's the setup I saw yesterday. The setups I saw yesterday. I hope this helped, and I hopefully the video. I've been having some technical problems, so hopefully the video comes out all right. And I will be talking to you soon. Thanks for watching, and keep checking back on the post. Take care.